Welcome back to Everything Money. We're so happy you joined us from all over the world, Paul. We have people watching all over the world. It's astounding to think this show that we started in this room, in the same room 3 years ago. We have people we just have a great following. We're very happy you joined us again. We're doing another blind stock reaction. Lots of videos on YouTube. If you're doing your due diligence and research, you're finding people that are pumping up the futures of some of these companies.
Inaccurate futures.
Improbable futures.
Improbable.
And so if you read more and more about, I tell some of these folks, Paul, when I have conversations, if you read literally a paragraph about any of the famous investors, they take into account the future. But a lot of times they let these companies become something and then invest when the price is right. And so today we're gonna continue this notion by showing Paul a blind stock. He has no clue what sector this in. He has no clue how long this stock's been around. We're gonna look strictly at the numbers and the fundamentals behind this company and see if this is something you're interested in, Paul. So go ahead and spin around there, my dear friend, and tell me your first thoughts comes from a wise investor like yourself about the market cap and some of the numbers behind this. Go ahead.
$141 billion market cap, 142 PE. Oh my God, sick. 4.2% profit margin, 22.8% gross margin. I would say it's Tesla, but that market cap's too low.
We want a PE around 20, Paul. 143 basically means what?
It means based on, I don't know anything about their growth potential, it's really high. Their revenue last year was $24 billion. This feels like software. Maybe. No, it's not. The price to sales ratio isn't that high. Wow, a dividend yield. Oh, wow, look at this. So here's the deal, guys. Their dividend paid was $2 billion.
But their total free cash.
Their free cash flow average for the last 5 years was $4 billion, so they had plenty there. But last year was $2.5 billion, which could be COVID related. A really low return on assets, but a very high return on invested capital. All right, it's a little bipolar stock. It's all over the place. I don't know what to think here.
Let's head over to the income statement, Paul.
Let's do it.
Here is our income revenue over the past 5 years.
20 billion to 22, so not very big growth. 20 to 24 with a drop last year. Okay.
How about
next?
Profit growth?
Profit growth, 4. Ooh.
Look at that.
Okay, but that's, again, could be COVID. Oh, sorry. No, net income here. 2.96 to 1. It could be COVID related. Mm-hmm. Looks like it is.
Shares outstanding is pillar number 5. Looks like they're buying back
shares. They are buying back shares. Good boy, guys. Good boy.
1.4 billion to 1.
And over the last 10 years, they've been buying back shares pretty consistently.
Nice.
Okay, keep going.
Okay, how about current assets over current liabilities?
So remember the PE was 142 with $1 billion in profit, but the previous year they did 3.3 billion in profit. So on a stabilized year, their PE is still more like 35 or 40, which is still high. Right?
Yeah,
okay.
Of course. Current assets.
$7 billion in current assets.
Okay.
Current liabilities, 6.5. So enough to pay it off. Okay. Was it 7 billion in current assets?
Yes, you're right.
Okay, so enough to pay it off, but not by much.
Okay.
And total liabilities were?
36 bill.
Oof, wow.
That's way underwater, huh?
Well, I'm not worried about that, but it makes me wonder what kind of company this is. Is it a real estate company?
No, we would never do that to you.
I don't think they would pick that.
No, we would never do that to you. No, very standard company.
Really? Okay. It's a lot of debt for that kind of ratio. Okay, keep going.
So you're not loving this so far.
No, but go ahead.
Okay. Free cash flow growth over the past 5 years is pillar number 7. Paul, you know this.
3 billion down to 2.4 billion. That's an X. This $10.5 billion fluke. What was the reason for that? Changes in working capital. Mm-hmm. Okay, so I wouldn't even consider that. I'd say the average is actually like 2 and declining times 20. What the heck are you doing? $40 billion. What was the market cap? 140?
140 billion.
Yeah, this is just overpriced.
Way overpriced.
Way overpriced.
Triple priced.
That's a lot.
Yeah, there's free cash flow. I wanted to show the 8 pillars so you can get a look at what we're talking about here.
Yeah, this is bad.
This is bad.
Yeah, I don't like this. I'd be passing on this company without even knowing what the company is because the growth's not there. Even when they take out last year's decline, even before then, the growth wasn't huge. So to get, I mean, it's a tough one. I don't know what kind of company this is. I have no clue. But I'm just looking at going, unless I find out what the company is, there's some big future they have that I don't see right now because of the numbers, I just pass.
Yeah, I mean, would you be swayed if they had government contracts in the works, or they're building bigger gigafactories in Austin. I mean, would that change your mind on this company?
Of course, listen, if the potential for the company is much bigger than it is. So last year they fell a lot. So is it retail? What were the margins there? Yeah, it looks like a retail company here. It looks retail. But Best Buy before had a jump in revenue last year and retail. So what kind of retail would this be that would have this? That's the question. What's the retail that would be? Because the shares outstanding declining tells me it might be retail because that's why they're trying to get people hyped about it. Dividend might be retail. I don't know. Those free cash flow numbers are kind of concerning, especially considering this 5-year average is based on a $10 billion change in $8 billion change in working capital helping that. So really the average is it's about 2.
Mo, were people trading this stock in the bid and ask, or would you think they'd be interested?
I mean, I would be okay with it. The problem is, we're moving into this downtrend. We have a nice engulfing candlestick today moving down. I just need a few more. Now, we do have resistance at $114 that I've drawn in, that I'm going to draw, 109, which is kind of just sitting right there, and then also 104. So this is probably more of a swing trade. Let me pull it up. I have a feeling you're going to have to fight moving averages. Yeah, that's what those resistance points I just drew were moving averages. So if you can break below all of your moving averages and break below 114, you could probably short it down to the 200-day moving average. But even then, that's just a lot of support. Why fight the support?
This isn't a screamer for you too. There's so many different stocks. There's no reason.
It's looking very nice on the long-term chart, but when you look on this chart and you see these moving averages, why bother fighting with that?
Paul, would you like to meet your ex-girlfriend here? I was going to say your bride, but you're not liking her, so.
Yeah, let's see it.
Here she is. Look at a picture of her. She's green.
Starbucks.
Starbucks.
Wow.
What do you think?
Really?
That's very what interesting.
Yeah. I mean, there's the Starbucks are everywhere. The joke is you can go to a Starbucks on either side of a street half the time, and the numbers.
I don't think that's a joke. That actually exists in some places.
Yes, for sure. It's not this Starbucks. It's the one across the street.
I thought their trajectory was like this, not like that.
Yeah, we can go back.
I'm surprised.
So, final take, Paul, on Starbucks.
I don't know if I'm gung-ho at this price at all.
Yeah, definitely COVID related. I mean, the stock was $92 prior to COVID, dropped all the way down to $56, and then this huge run up.
Yeah.
Now, is there a coffee company that is equivalent to this? I hear people talk about Dunkin' Donuts, but I mean
is Dunkin' Donuts public?
Like a real handcrafted
DNKN.
Yeah.
Oh, DNKN.
Yeah.
Yeah.
Well, let's take a look at it.
Wait, no, there's like nothing on there. Did it just go public or something? Why do we not have data on it?
This is bonkers.
Bug.
But besides them, I don't know of any other singular coffee company that does coffee.
Pete's?
Are they public?
I doubt it.
Yeah, but I mean, not like just.
It's not like
they've
Starbucks.
just developed some huge.
A lot of them. It seems like a lot of mom and pops are coming in to just sprinkle in competing with Starbucks. Of course, they're not going to take them out, but that's what seems to be the trend.
Let me look up Starbucks here and see what I think of. Let's look at the income statement. Yeah. Okay, big growth there.
What they've done lately.
Free cash flow is what just blows my mind.
Why is that?
Did Dunkin' just get acquired or something?
The change in working capital
because this
there.
To me tells me.
What do you see, Mo?
Unless this is a glitch on my chart, this right here tells me that they're going to be.
Well, we have no data either on ours, so it's not a bug. There must have been something that happened.
It must be that they're going to get bought for basically $106.50 a share.
For Dunkin'?
Yeah, because if you get something that jumps up here like this, and it goes to 106.50 or whatever the price is, and
or they're being taken private.
Yeah, they're going private.
Maybe, I don't know.
Or they're going private, or they got bought for $106.50. So they're doing plant-based stuff.
Well, Paul, that's our blind take on Starbucks. Final thoughts on this?
Yeah, I'm not buying at this price.
Right? We're just avoiding.
Yeah, I mean, it's so big also. I think they're closing a lot of locations too to try to consolidate.
They are.
It just seems like a very, very expensive. By the way, I love Starbucks. I love their mint, their peppermint hot chocolate in the wintertime.
Yes.
It
warms your
my
soul. Of course it does. So.
Oh, yeah. So the very, very first day of Everything Money in its original form. Remember? You came to my house.
Oh my
I went to
God.
the office.
Yes.
Steph tells me, Paul, I'll be at the office. I'm just going to get Starbucks.
I need coffee.
An hour and 15 minutes later,
Yes.
the guy shows up. And I'm like, what the heck happened? There was construction. He got lost. He got sent on a
No. I put it
turnpike.
in my phone. They said, go ahead and jump on the turnpike. I go through the toll. I drive to the next stand and get at Starbucks.
Meanwhile, there's one 8 minutes down the road in Brecksville. And I'm like, where the heck is Seth?
Then they close the next exit. I literally drive like 40 minutes away and then turn around, pay for it on the toll to drive to Everything Money. And that was us.
That was the very first day of this channel in September or October 2018.
Yep, that's right. Yep, we were looking it up last night. Anyway, the point of all
Yes.
this, folks, is we want you to look at these companies, not so much blindly, but maybe more emotionless, and find the deals out there that maybe so you're not swayed by other YouTubers or what's in the news or what's trendy or what's hyped. And of course, I don't know about hype. I've never heard Starbucks being hyped, but obviously it's just too damn expensive for us. We want to find a deal, and this is nowhere near one of those. So that is our take on Starbucks. You can join our Patreon and get access to all this software below. Make sure you follow the thumbs up on the way out, and we will check you on our next video. Thanks for watching.